What is up, and welcome to the We Are Investing channel, a channel that's dedicated in investing and personal finance. On today's video, we are going to go over the top stocks to buy right now. We are going to discuss the stocks that I bought over the prior week, and we're going to dive into why I bought these stocks. Now, last week and this month have been a great time to be an investor or trader in the stock market. We are experiencing great returns right now. It is a great time to invest and trade these stocks. Now, over the last month, since October 30th till today, the portfolio is up $35,160.08. These are phenomenal gains. Now, if you want to stay in tune with the stocks that I'm trading and investing in real time, you have to sign up for the Patreon page, which I have a link down below. Another thing you can do is consider hitting that subscribe button and ringing that bell so that you are notified as soon as I make any videos. Also, hit that like button so this channel can be exposed to other people so that we can help out the world be better investors. Now, with all that being said, before we dive into the stocks that I bought this week, let's proceed with the beer review for today's video. It is the weekend, and every now and then I incorporate beers into my video, so let's proceed with the beer that I will be drinking for today's video. For today's beer, I'm going to be sipping on a Brewdog Hazy Jane IPA. This beer is born in Scotland, but brewed in the United States in Ohio. I like this beer. I think it has good taste, and I am a fan of Brewdog Brewery. If you run across a Brewdog brew, definitely give it a try. But with all that being said, here's to you fellow investors, and let's enjoy the video. Alright, so the portfolio is up more than $35,000, and the top performer right now is Callaway Golf, ticker symbol ELY. Now, I bought Callaway Golf at $17.20 a share on November 13th. And right now, the stock is trading at $20.73. So great returns thus far. But I do not think the returns are done with for this stock. I still think there is tremendous upside in Callaway Golf. If you look at the 1-year chart, we are getting close to those 1-year highs. And I believe that once we break that resistance, we are going to gap up. And I still have a price target for this stock at $25 to $30 a share over the next 6 to 12 months. Now, I bought Callaway Golf for two main reasons. The first, I love golf. I love playing golf, so I'm investing in something that I like. Another reason, golf is performing extremely well right now. So many people are playing more golf. A lot of people are getting introduced into golf because of the pandemic, and that is going to drive up golf sales, and that will help Callaway Golf as a business. Another reason was Topgolf, which I think is a great business altogether, and Callaway Golf owns Topgolf. Also, I love Topgolf as a reopening trade because I think that once the pandemic is over and we're reopened as a society, Topgolf is going to thrive like it did prior to the pandemic. So if you add up all those reasons together, I am extremely bullish on Callaway Golf, and that is why I think there is still tremendous upside with this stock. Now, another stock that I think is a great buy right now for a swing trade is Alteryx. I bought Alteryx on November 25th at $117.35 a share. Now, if you look at the chart for Alteryx, you can see that in the last 3 months, the stock has not performed well. They are down 0.10%. But when you look at the chart, you see that the stock was trading much higher and then it sold off following its earnings call. Now, this is a tech stock that I think has upside. It is undervalued when you compare it to other tech stocks, and I think it has a good setup for a swing trade back up to those $140 levels. Now, let's take a better look at the charts. Now, this is the 1-month chart for Alteryx, and the reason why I got into this stock for a swing trade is because I think it's ready to break out back up to $145 a share. The reason why I think that is because we broke the resistance at $121, and the next gap up is not until $145. Also, over the last couple weeks, the stock has been trading higher. It's been setting higher highs and lower lows, which is an indication to me that the stock bottomed out and we are no longer catching a falling knife. I think that Alteryx has a good possibility of gapping up because there is no other resistance until $145 a share. Now, I got into Alteryx at $117.35 a share. The risk I see is at $112. That is our support line. That would imply a risk of 4.6%. The reward is at $145. That would imply a reward of 23.6%. So the risk reward ratio for this trade is very favorable, and that is why I like this as a swing trade. We're risking about 5% to gain around 24%. Those are great odds, and I will take that any day. The next stock that I bought was Ford Motors. I bought Ford at a price of $9.05 a share on November 25th, 2020. Now, if you look at the 5-day chart for Ford, which trades under ticker symbol F on the New York Stock Exchange, you can see that the stock is trading at $9.09. So I haven't really made any money on this trade yet, but I just got into it a couple days ago. Now, when you look at the 5-day chart, you can see that there was a sell-off of around 3 to 5%. This was because an analyst from Morgan Stanley downgraded Ford on its EV strategy. And because of that downgrade, there was a sell-off in the stock. It wasn't a tremendous sell-off, but I've been wanting to get into Ford, and I'm going to utilize this sell-off to my advantage, and hopefully I can make some money off of Ford. Now, Ford as a company is a company that hasn't really performed over the last 5 years. However, I think that they can recover, and this could be a recovery trade, and I definitely think Ford has the avenues for future growth. They have a new CEO. They're focusing on electric vehicles. There's definitely a lot of good things that's happening with Ford right now that could make you like them as a long-term or even as a swing trade. Now, if you look at the 1-year chart for Ford stock, you see that we're getting close to those 1-year highs. And if we break through those 1-year highs, we could gap up and there could be money to be made off of Ford stock. Now, there are a few things that I like with Ford stock looking forward over the next 6 to 12 months. The first, Ford cut its dividend. However, the company is performing much better and they could reinstate that dividend. And once they do that, that could drive growth in the share price because you'll get new investors flooding into Ford stock because of their dividend. The second reason is they have a new CEO. The direction of the company seems to be more focused on electric vehicles, and I think this could be an undervalued EV play. You have the Ford Bronco coming out, which looks stunning. You have the electric Mustang, and then you're going to have the electric F-150, which the F-150 has been the #1 selling vehicle in the United States for so long. And then you also have the Ford Transit van, which is also going electric, which could open up doors for the company in the electric vehicle market. There are a lot of things to like with Ford right now. The charts are indicating that it might break out past those 1-year highs. The dividend coming around could drive the share price up, and there is an avenue for future growth. Those are the reasons why I like Ford stock right now and why I am getting into a swing trade or potentially long-term investment with Ford, depending on how the play works out. Another stock that I bought that nobody is talking about is LESL Incorporated. I bought this stock on November 24th and November 25th at around $20 a share. Now, currently, LESL is at $20 a share. I've not made any money. I've actually lost a little bit of money in this trade right now. Now, the reason why I like LESL is because the business that they are in. They are a pool supplier. You can buy pools from them. You buy chemicals. They have a great rewards program which keeps customers shopping at LESL's once they buy a pool for their chemicals and supplies. So you buy one pool from Leslie's and you are a customer for life potentially. Now, if you look at the price targets for Leslie, you can see that the low price target is $20 a share. The high price target is $26 a share. And the average price target is $24 a share. Now, this stock IPO'd not too long ago, and what you're looking at in the 1 month chart is the entire chart history for Leslie. So we do not have a lot of information on support and resistance lines for this stock because it is so new. However, I do think that around $20 a share, your downside is pretty limited, and I think it's a good price for a long-term or swing trade. I definitely think that Leslie's over the next 6 to 12 months has great potential because once we get into those summer months, we will see a huge demand for pools like we saw in the prior summer. In the prior summer, pool sales skyrocketed as consumers splash out on coronavirus cocoons. Industry specialists stated that I've been in the industry for 35 years and I've never seen anything like this. They stated that orders for their steel and composite pool walls surged 200% in 60 days after a lackluster March and April. And he has now doubled output by taking on more workers, adding shifts, and paying lots of overtime. The shortage of material in the industry is great. Pumps, heaters, above ground pools have been sold out for some time. Now, the fact that they were sold out last summer means that there are a lot of customers that were not able to get their pools and they're still shopping for a pool, and they will probably buy one this summer, or they're already in the order books. They have their order in place. It's just waiting to get delivered and installed in the summer months. So with all that being said, I definitely think there is an avenue for future growth with Leslie, and I like the business model where you sell a pool and then you continue to sell supplies and chemicals to that customers, meaning that those customers will continue to shop at Leslie's and you'll have reoccurring revenue from one customer, which is great for business. Now, if you look at the stock, the volume is extremely low. There are not a lot of investors or traders investing or trading Leslie stock. Now, one thing that is somewhat of a concern is the price to sales ratio, which right now is about 4. That is a high price to sales ratio. However, if you think that the company will grow revenue by a decent amount, which I do because pool sales will be booming in the summer, this price to sales ratio will be justified. The next stock that I bought is Macys. I bought this stock at $11.10 a share on November 25th, 2020. The current share price is $10.85, so I've lost money on this trade so far. And over the last year, the stock is down 29.41%. Now, the reason why I'm getting into Macys is because I need exposure to retail during these holiday times. And Macys is a stock that has lagged tremendously, and it might be for good reason. They are heavily involved in brick and mortar, and that is being hurt because of this pandemic. However, I think there is a great chance that they beat analyst estimates, and we see a pop in the share price. I do not want to hold Macys for very long. I really do not want to hold this past Q1 of 2021. This is going to be somewhat of a short swing trade, 3 to 6 months. Now, investing in companies like Macys right now is somewhat of a risky trade. It is a higher risk trade in my personal opinion. Now, when you invest in these higher risk trades, or when you trade these kinds of trades, one thing that I like to look at is the balance sheet, because I do not want to invest in a company that is likely to file for bankruptcy right now if things do not change quickly. And the balance sheet for Macys is fine. In the fiscal year 2020, they have total assets of $21.17 billion, and they have total liabilities of $14.8 billion. So that is a good ratio. And another thing with Macys is they have some of the top real estate in the world. In New York City, right at the prime of Manhattan. In Chicago, some of these stores sit on lots that are super, super expensive. You're talking about some of the best real estate in the world. Macys has stores in those locations. which is great for their balance book. If things were to go wrong, they could sell some of those locations and make a ton of money. Another thing with Macys stock that might help drive the share price up if they beat estimates is the short interest for this stock. Right now, the short percentage of float as of November 13th, 2020 is 41.20%. That is very high short interest, and there could be a short squeeze if we see good news come from Macys stock. Now, if you look at the 1-year chart, I am identifying a support at around $9 a share. At the price that I got in at $11.10, $9 would imply a risk of 19%. Now, the reward I see at around $16 a share, but it could be higher if we experience a short squeeze. That reward would be 44%. So I'm risking 20% to make around 45%. Those risk reward ratios are not awesome, but they are good enough for me to get into a swing trade right now. And like I said, I needed exposure to retail, and this is how I'm doing it through Macys as a swing trade over the next 3 to 6 months. So that pretty much wraps it up for this video, guys. Thank you so much for sticking around to the end. If you like this video and the content that I am providing, please consider hitting that subscribe button, ringing that bell, and smashing that like button. Also, there are a bunch of links in the video description down below that can help you be a better investor. We got a Facebook group, a Discord server where we talk stocks on the daily, and the Patreon page where I notify members as soon as I make any trade or investment. But with all that being said, it's been real, it's been fun, it's been real fun, and this is We Are Investing, and together we are invincible. See ya!